Good morning, all. Welcome to the SBI Securities Daily Market Podcast, where we discuss views on Nifty, Bank Nifty, key sectors in focus, as well as views on currency. We will also be discussing a bit on the dollar index and the positioning of FIIs with respect to the open interest data. Now, post a softer opening yesterday, spot Nifty took support at 19,550 and witnessed a continuation of Wednesday's positive momentum, crossing all resistances one by one and finally closed at 19,725 with a gain of 0.7%. Now, what supported the Nifty from lower levels was once again IT, the likes of TCS, HCL Tech joining the party. And remember, we discussed it yesterday morning also that they look bullish and they supported the IT index and Nifty from lower levels. It was a surprise entry by Bank Nifty yesterday now with HDFC Bank outperforming for second day in a row, and it was well supported by the Axis Bank as well as Kotak Bank from lower levels. If we just discuss a bit on the global front, just a chart check on the global front. If we compare Nifty with respect to the S&P 500 on ratio charts, Nifty is outperforming S&P 500 since last 5 sessions, and we expect this outperformance in the Indian markets to continue in comparison to the S&P 500. Coming to Nifty, for fresh weekly expiry, highest put writing is visible in 19,600 and 19,500 strikes, which implies that 19,580, 19,630 kind of levels could act as an important support zone. Until this support holds, bullish momentum could continue up to 19,850, 19,880 on the upside. And this looks likely with IT moving well, even banking having joined the party. It's just now Reliance which is left behind. So, and also Reliance also is forming supports around 2,400 levels. So just watch out for Reliance also. If it sustains about 2440, I feel that that stock also could support the Nifty going ahead from here. From the call writing perspective in Nifty, call writers are strong in 19,800, 19,900 and 20,000 strikes, which means that for the day 19,880, 19,920 zone will act as a resistance. After 7 days of underperformance for Bank Nifty in comparison to Nifty, yesterday was the first day of outperformance. So while we have seen a good move from lower levels in terms of Bank Nifty, this index closed at a 10-day high, and we feel that going forward 44,500, 44,550 will act as an important support, and significant put writing is witnessed in 44,500, 44,600 strikes. Now this implies that the technical support zone of 44,500, 44,550 will act as a very important level. Until this holds, upside up to 45,150 could be witnessed. So on a whole, 44,500 on the downside, 45,150 on the upside could act as a trading range for the day. If we just see the call writing front, significant call writing is visible in 45,000 strikes, which implies 45,150, 45,200 as an important resistance going forward. Now, just on the flip side, in case 44,500 is breached on the downside, then we could see Bank Nifty once again entering the old range and retesting supports at 44,200, 44,250. However, options data, if we see it, suggesting a wider range of this 44,500 on the downside and 45,150 on the upside for the banking index. Coming to the FII data, FIIs have been net sellers to the tune of 758 crores, while DIIs have been net buyers to the tune of 28 crores. FII's long short ratio for index futures, now this has seen a very good improvement. Remember last few days we have been discussing that FII's long short ratio is at 50%, which is better. The last entire August series it was hovering around 40-45%, and yesterday's ratio has seen a fantastic improvement to 57%. So this is a positive sign. Also, if we see the FII action in terms of index futures, stock futures, they have turned net buyers in index futures and stock futures, and for every one index call option sold, they have sold 2.5 times put options. So this is also a bullish sign. So remember yesterday while we were discussing about the FII data, and that was quite kind of bearish in nature. We discussed that we should not be reading too much into just one day of bearish data, since in the previous 4-5 trading sessions the data was bullish. So this is why we always don't see just one day at a time. We see it on a consolidated basis, that how the data is panning out in the last 5-6 sessions. Just to summarize, Nifty's trading range could be 19,550 on the downside and 19,850, 890 on the upside for the next few trading sessions, and Bank Nifty's trading range could be 44,500 to 45,200. Now let's discuss where there can be some interesting opportunities in terms of stocks and sector specific moves. Once again, it was defense all the way yesterday. We saw a lot of good moves in Masgao Dock, Cochin Shipyard, and these stocks are on a tearaway rally. But apart from the defense names, we feel bullish momentum can continue in IT, power, PSU banks, CPSE stocks, chemicals, and capital goods. A lot of these sectors and stocks within these sectors have seen a fantastic move yesterday and have seen a good long built up in terms of derivative open interest built up. Uh, Infra stocks, consumption stocks, and real estate stocks have also seen some positive traction. So we feel all these uh, stocks as well as sectors can still continue doing well. And once again, along with the broader market, along with the Nifty, broader space, including these stocks and sectors, could continue moving well from here on also. Brent crude has inched up to $90 a barrel, and even dollar index is sustaining above 105 levels. Now this is some kind of a worry. So while we are all discussing the Nifty's chart being bullish and all data points are also bullish and hinting towards an possible upside, one must not be complacent and be over leveraged in such a macroeconomic environment, and have a fear of missing out feeling, like we say that you just keep on chasing the mid caps. So I feel that attitude will not be rewarded here. And from here on, I am still repeating, like again, like I've been doing in the last few sessions. In case the macros start to worsen due to crude price and dollar index, the first casualty could be the mid cap stocks, and the large caps will relatively still do better. So hence it is always good to keep on booking partial profits in stocks that have seen a massive moves in case of mid caps, and reinvest that part of your capital in quality large cap and ride the volatile environment. Coming to just the currency front, due to the strong dollar index, we have seen USD INR futures for the third consecutive day trade above 83.10 and closed at 83.25, which is kind of a very crucial level. Now important supports on the downside would be around 83 levels. Until USD INR future holds above 82.95 83 levels, it can extend its up move up to 83.50 levels. On the downside, below 82.95 83 levels, a corrective move up to 82.70 82.55 can be witnessed. So that's all from my side, friends. Hope you enjoyed listening to this podcast and found it useful for your trading decisions. Do tune in tomorrow for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.